friends, Chitra here. Welcome to my YouTube channel. How are you all? Hope you are all doing good. Today we are going to see one of the intraday strategy that we can use for Nifty and for the Bank Nifty. The time frame we are going to use is 5 minutes time frame. So if the 5 EMA and the 20 EMA is giving the bullish cross, how can we book our profits? That is, we are going to use two more indicators, that is the DMA and the TMA. So what is this DMA? DMA is the double exponential moving average, and what is TMA? TMA is the triple exponential moving average. So we are going to use only these four indicators in our trading, that is for intraday trading. Okay. So if the 5 and the 20 EMA is giving the bullish cross, and if we are seeing that DMA and TMA is above, we can book our profits as DMA, because this DMA and TMA will act as the resistance. Also, if the price is above all the EMAs, that is the 5 EMA, 20 EMA, DMA and TMA, the trend is bullish. And if the price is below 5 EMA and the 20 EMA and we got the bearish cross, means the trend is bearish, and also the price should be below the DMA and TMA. Okay, so we can look into the video and we can understand what is this DMA and TMA and how can we use this in our intraday trading. What is an exponential moving average? That is EMA. EMA gives greater weight to recent price to make it more reactive to adjust to the price action. Many traders will use EMA in their trading, and EMA changes faster to account for recent price action and gives traders fast entry and exit signals than a simple moving average. So when we compare exponential moving average with the simple moving average, before giving, that is before simple moving average is giving the signal, we will get the signal from the exponential moving average. So many traders prefer to use exponential moving average instead of using the simple moving average. For example, a 5 EMA is the average price over the 5-day period. So if you are comparing the 5 days, that is in the daily time frame chart, it is taking the average of the past 5 candles. That's how the 5 EMA is the average price over the 5-day period. What is a 5 EMA? The 5 EMA is a great way to use a trailing stop for the winning trade. If we are in the short or in the long trade, we can trail our profits along with the 5 EMA. This works strongly in the trending markets. After the downtrend is into oversold condition, a strong reversal back over the 5 EMA can be a momentum for the long trade. Means, what is the meaning of that? See, this is the bearish crossover. So the red EMA is the 5 EMA. So after that, when we see the green candle going above the 5 EMA, that can be a momentum for the long trade. So this is how we have to use the 5 EMA in our trading. Now 20 EMA. 20 EMA acts like a bounce trend support for the candlesticks. In a downtrend, price will head down. Okay, but at some point you will see the price rise up and head to test the 20 EMA line. So what is the use of 20 EMA in our trading? So here this is the downtrend and the price is heading up to 20 EMA, and from there we can see the rejection again. So here also we can enter into the short trade. What is called double exponential moving average, that is DMA. It's nothing but it's an exponential moving average, but that is the double exponential moving average. It is a traditional indicator devised to reduce the lag in the results produced by the moving average. Technical traders use it to lessen the amount of noise that produce the movements in the price chart. A moving average tracks the average price of the asset over a period of time to spot the point at which it established the new trend, that is price is above or below the moving average. The DMA therefore has a stronger filter for the noise of irrelevant market action that can distort the charted results. So if you are using DMA in our chart, we can easily identify the trend of the market. This is the double exponential moving average, that is DMA. Okay. So here the price is above the 5 EMA. The red EMA is the 5 EMA and the green EMA is the 20 EMA. And also if the price is above the DMA, that is double exponential moving average, we can enter into the long trade. Okay, so this gives the double confirmation for us to enter into the long trade. We will see what is triple exponential moving average, that is TMA. The triple exponential moving average was designed to smooth price fluctuations, thereby making it easier to identify trends without the lag associated with the traditional moving average. Okay, It does this by taking multiple exponential moving average EMA of the original EMA and subtracting out some of the lag. When the price is above the TMA, it means that there is an uptrend, and if the price is below the TMA, it means that the trend is bearish, that is the downtrend. The TMA help to identify the trend direction, signal potential short-term trend changes or pullbacks, and provide support or resistance. So in the live trade, the TMA will act as the support and resistance in our trade. This is the triple moving average, that is called TMA. So the blue EMA is the TMA and the black EMA is the DMA. So the 5 and the 20 EMA gave the bearish crossover here, and this is the DMA. So here this TMA will act as the resistance. So from there we are getting the rejections. So from the resistance level we are getting the rejections and we are getting the bearish crossover. So this gives the double confirmation for us to enter into the PE trade. This is the Nifty 5 minutes time frame chart. Now we'll see the indicators for our strategy. First we need 2 moving average. Okay. The first moving average we are going to add is the 5 EMA. Alright. And the second EMA is 20 EMA. Then click on OK. And we are going to add the DMA, that is double EMA. Here we can see an option called double EMA. Click on this. And one more indicator we need is triple EMA. So this is called triple EMA. Click on that. So go to the settings and the length, right? Length here it shows as 9. We are going to change this as 200. Okay. And because already we are having 5 and 20 EMA. So we can change this style as circles. Okay. So I'm making this as circles and I'm making the color, changing the color to black. So DMA is in black color. And go to the TMA. Here also change the settings. This is I'm maintaining it as blue. This also changed to 200. Okay. So and also TMA also will make this as circles. Okay. So we can easily identify the 5 EMA. This is a 20 EMA and the black is the DMA and blue is the TMA. I will write down here. So the red EMA is the 5 EMA. Okay. And the green EMA, this green EMA is 20 EMA. Green one. Okay. And we are having the 2 DMA and one is DMA and the other is the TMA. So which one is DMA? The black EMA, that is the double EMA. This is DMA. Blue is TMA. That is triple EMA. So we need all these indicators for our strategy. Okay. So now we can see how can we enter into the long trade and short trade. So we will be entering into the long trade if we get the bullish cross. That is, if the 5 EMA is crossing the 20 EMA, we can enter into the long trade. But we got the trade here. We can understand that there is a TMA here. So that is a triple EMA is there. So that's why that is acting as the resistance. So once you enter into the long trade here, what will be the stop loss? So this green candle gave the confirmation to enter into the long trade, and stop loss will be the low of the green candle. The target is the TMA, that is the triple EMA. You can book your profits here. Once we got the retracement at the 20 EMA, we can again enter into the long trade, and if we are getting any green candle, this green candle gave a close above the TMA also. So we can enter into the long trade. Okay. And what will be the target? The next target will be the DMA. Okay. That is the double EMA. Also, if the price is above the TMA and DMA and it is above all the EMAs, the trend is bullish. We can trail our profits along with the 5 EMA. You can see here. So here we got the bullish crossover. This is the bearish cross. This is a 9:15 candle. That is on 20th June. This is the bearish cross. And also the price is below the DMA and the TMA. Okay. And here we can enter into the PE trade. That is the short trade. Here we can look for a short opportunity in the Nifty. and we can trail the profits along with the 5 EMA. This green candle gave a close above the 5 EMA. So we can book our profits. Again, we got the bullish cross here, so we can enter into the long trade. But if we enter into the long trade, we can see there are resistance. That is the double EMA and the triple EMA. So we can book our profits here. And again, if you are getting any retracement, that is a pullback to the 20 EMA. And if you are getting any green candle above, we can go for long trade here for the first target as DMA. And we can trail our profit along with the 5 EMA. We can see one example from 19th June. Here the price opened gap up. Here we got the bearish cross, that is a 5 and the 20 EMA gave a bearish cross. We can enter into the PE trade. Also, the blue EMA, blue dotted lines is the TMA, that is a triple EMA, and the black one is the DMA. So here this red candle gave a bearish cross. Also, price closed below the TMA. So we can enter into the PE trade. Also, we have DMA here. Again, the next candle, that is a 10-20 candle, gave a close below the DMA. So here if we enter into the PE trade, we can trail our profits along with the 5 EMA. If the price is below the, if we get the bearish crossover, we can enter into the PE trade. Also, if we are getting the price below the TMA and below the DMA, means the trend is bearish. So we can enter into the PE trade and we can trail our profits along with the 5 EMA. So again, we can see here the price got consolidated. Here we got the bullish cross. On the same day, here we got the bullish cross. This green candle gave the bullish cross. If we enter into the trade, here we can see that there is a resistance. The DMA is here and the TMA is here. So in order for the price to go up, the price should cross this TMA and DMA for the long trade. So we will be aware that we should not enter into the long trade. Again, we got a bearish cross, so we can enter into the PE trade again and we can book our profits according to the RR ratio. We can see one example from the Bank Nifty. Here, this is the 14th June. The first red candle that gave a close below 5 EMA, 20 EMA, DMA and TMA. So the trend is bearish. So we'll wait for the price to give a pullback. So we can see here we got a pullback, that is a green candle gave a close above the 5 and 20 EMA. So if you are trading only with the 5 and 20 EMA crossover, we will not understand where is the resistance and the support. So we are using DMA and TMA here. So we got the red candle, that is a 10-30 candle, 10-25 candle is the red candle which gave a close below the TMA. So that is the resistance for Bank Nifty. So here we got the confirmation that price not able to break that particular resistance level. Again, we got the bearish cross here. So we got the double confirmation in order to enter into the PE trade. So where can we enter into the PE trade? Below this red candle, if the low of this candle is taken away, we can enter into the PE trade. That is, we can look for short opportunity below this red candle. Stop loss will be the high of this red candle. So we can trail the profits along with the 5 EMA. Or if you are trading Bank Nifty, you can keep the fixed profit, fixed target as 40 to 50 points in Bank Nifty. So that is a trending day. Price was trading along with the 5 EMA. Okay. We can see one more example. The next day what happened? This is on 16th June. 16th June, the first candle is a pin bar candle which gave a close above the TMA, and the 940 candle also gave a close above the DMA. So the trend is bullish. So one can enter into the long trade. So after the price gave retracement, then again we got one green candle, that's a 10-10 candle is a green candle. So above this green candle we can enter into the long trade, and price was trading above the TMA and DMA for the whole day. So we can enter into so we can understand that trend is bullish for that particular day. This is my Telegram channel. Here I will share my views on Nifty and Bank Nifty based on technical analysis. Post market, I will share the key zones for the next day trading. This is a free Telegram channel. In the live market, I will be sharing the key zones for Nifty and Bank Nifty, which will help you in our trading. Traders can make use of these levels to make the better decisions. Hope this video is useful to you. Please don't forget to like, share and subscribe. Click the bell icon too for my upcoming video notifications. Thank you for watching.